We've started our 30-day challenge by looking at different ways that we examine stocks, fundamental analysis, and technical analysis. However, if either of these methods work so well, the question becomes, why do the majority of traders fail? We learned that in the beginning there was fundamental analysis, which takes into account all of the different variables that can affect the company's balance sheet. It looks at the supply and demand for a stock and makes a prediction of what should be. It did not, however, take into account the irrational behavior of some of the traders. Then came along technical analysis. Believe it or not, when in the 70s, when it first started out, it was considered some type of hocus-pocus witchcraft. Technical analysis understands that traders participate in any given market on any given day. And many of these traders do the same kinds of things over and over again. In other words, they develop behavior patterns. These patterns are observable and they repeat themselves with a statistical reliability. Technical analysis, in my humble opinion, has proven itself to be far superior to fundamental analysis. It deals with what is happening now in relationship to what happened in the past, and not necessarily what the future and what should be. As great as technical analysis is, it is not the solution to being a consistent, profitable trader. It's not as simple as following this indicator or that indicator, or watching this chart or that chart. Even with the best technical analysis, many traders continue to fail. You see, there's a big difference between predicting that something will happen in the market and actually pulling the trigger and entering and exiting trades based upon what you see. Mark Douglas, the author of Trading in a Zone, calls this the psychological gap. And this gap can make trading one of the most difficult endeavors that you can ever undertake. Being able to see something and actually enter that trade based upon what you see seems simple enough, but it's what separates successful traders and those that lose money. What separates the best traders from those who struggle is not the latest technical indicator or more market knowledge. These successful traders simply have learned to think differently about how they interact with the market. As a part of technical analysis, we all attempt to learn how to identify buy and sell opportunities. However, learning these signals does not necessarily mean that you have learned to think like a trader. The defining characteristic that separates the consistent winners from everyone else is this: the winners have attained a mindset, a unique set of attitudes that allows them to remain disciplined, focused, and above all, confident in spite of the adverse conditions. The best traders can put on a trade without the slightest bit of hesitation or conflict, and just as freely and without hesitation or conflict admit it isn't working. In the video that I put out a couple weeks ago, Why the Stock Market Hates Me, I talked about that a good trade is a trade that you enter and exit based upon rules, regardless of whether or not you make or lose money. And that's exactly what a good trader does. Mark Douglas says that a good trader can get out of a trade, even with a loss, and in doing so, doesn't resonate the slightest bit of emotional discomfort. And that's really what it comes down to when it comes to a successful trader or the traders who struggle, is the ability to move on. The trade's over, the day is over, move on. You have to prepare for the next day. You have to prepare for the next opportunity. And if you're still controlled by that trade that either didn't go your way or whatever, if you're still emotionally controlled there, then you're not able to focus your attention to these new opportunities. And one of the reasons that traders hold on to these bad trades, that they hold on to these emotionally damaging trades, is that they have not accepted the risk of the trade. You have to understand that when you place a trade, you could be wrong. And many times you will be. And if you haven't accepted the fact that you're not always going to be right, the patterns will not play out, the singles could be wrong. If you haven't accepted the risk, the fact that the trade's going to go against you, then when it does go against you and you're wrong and you haven't accepted that risk and you haven't accepted the fact that you can be wrong, you hold on to it. And again, it blinds you. It blurs your vision to A, get out. You got to get out of that trade. And B, you have to be prepared to enter the next trade. Mark goes on to say in Trading in the Zone that 95% of the trading errors you are likely to make, causing the money to just evaporate before your eyes, will stem from your attitudes of being wrong, losing money, missing out, or leaving money on the table. And he goes on to call those the 4 primary trading fears. Again, fears about being wrong, fears about losing money, fears about missing out, and the fear of leaving money on the table. As long as you are susceptible to the kinds of errors that are the result of rationalizing, justifying, hesitating, hoping, and jumping the gun, you will not be able to trust yourself. And if you can't trust yourself to be objective and to always act in your own best interest, achieving consistent results as a trader will be next to impossible. As we bring part 1 of our Psychology of Trading video, we basically learned today that what separates the consistent traders and those who are not is the ability to understand how we as traders interact with the market. These successful traders have developed the right mindset. They are able to enter and exit trades without fear. They're able to continue to move on from one trade to the next and continue to see all the opportunities that the stock market provides and not hold on to the pain of losing and the disappointment of being wrong. Next, we're going to talk about what are the necessary steps that you have to put in place in order to be a successful trader and how to develop that right mindset.